Welcome to the first part of the End of Financial Year series. Now before we wrap up the end of financial year, we will cover reviewing your accounts and some tax tips. The first thing to look at is accounts receivable and accounts payable. So this is particularly important if you are using a cash basis.
Accounts payable are the bills that you can pay before the end of the year to claim the tax deduction in the current year. For accounts receivable, check what outstanding invoices you think will be paid before the end of the year, which could increase the amount of profit and tax to pay. Also, check if there are any invoices that you are unlikely to receive payment for at all, as you can look at writing these off as bad debt. Make sure all your bank accounts, credit cards, and loan accounts are reconciled. Sometimes the savings and loan accounts don't get reconciled during the year because they aren't the day-to-day transactions of the business. If you have trading stock, which are goods that you hold for resale, then at the end of the year you need to do a stock take so you can record the value of the stock that you are holding. At this time, you can also look at selling obsolete or slow-moving stock at discounted prices. Review your profit and loss report and compare it to last year. Then you can identify if any income or expense items for the current year are very different to the prior year, and check that transactions are correctly recorded. Review your balance sheet for anything that looks out of the ordinary. Some things to look out for are assets showing in credit, liabilities showing in debit, super payable and GST accounts are not reflecting what is actually owing at the end of the year.
There are some tax tips we haven't spoken about just yet. Look at paying your super guarantee for employees so you can claim the tax deduction for the current year. If you are a small business taxpayer, look at prepaying things like rent, insurance and subscription, but just be mindful of your cash flow, as you don't want to make things difficult for yourself just to save some money on tax.